TIpRanks presents TipTalks, the only podcast where you can listen to the insights, discover the trends, and power up your investment portfolio.
Hi everyone, and thank you for joining us today on this very special TikTok. I'm Uri. I'm one of the co-founders and the CEO of TIpRanks. And I have with us today a good friend of mine called Shachar Cohen. He is a managing partner at Lucid Capital, a tech-focused Israeli hedge fund that has consistently outperformed the NASDAQ and with over 17% in the last year. Shachar and I have been doing a lot of podcasts around finding interesting investments in different environments. And today we want to talk about the special situation in the Middle East, the war, then how it impacts your portfolio, and where can we find these special gems. So Shachar, thank you for joining us today.
Thank you for having me, Uri.
So over the last year, we have both discussed a lot about AI, the impact. The entire world was around AI. I think that the most popular search term was probably NVIDIA. And today is very different because we're not going to look for the special tech companies and the tech revolution around this space. It's more about war, atrocities that we're experiencing. And it looks like the world is going crazy. The markets are extremely volatile. This comes in a very unique macro environment with high interest rates, a lot of uncertainty. And usually in this chaos, you can also find amazing opportunities. And I really want today for our users to explore these opportunities. And so I thought of, looking for ways to find these opportunities. Usually you need to look at historical events and how were they different than this event and what were the real opportunities back then. And until a month ago, everybody were talking about Russia-Ukraine, right? Because that was the biggest engine for the changes that we're seeing in the capital market. So what can we learn from the Russian-Ukraine war? And is it any different than this war in terms of the opportunities we should be looking for?
Yeah, so I think first and foremost, the Russian-Ukraine war was kind of expected. And that's why you saw the first day when the war erupted, you have seen the market recovered from -7 or -5 in the first hours to almost, break even. And
the first day that the war broke?
Yeah, exactly. That war erupted, unexpectedly. And also the effect on the the effect of the global energy is currently relatively limited. I think as investors, the lessons from the Ukraine war was to focus on the second circle of impact. So while it was if you bought, for instance, wheat or gas, in the first days of the war, you actually lost money because it was very expected. But if you understood the implication on the green energy, on what will happen in Germany in terms of
natural gas.
Exactly, in terms of it was actually a run into alternative energy and coal. So coal, for instance, went threefold or fourfold. Then you had plenty of time to buy it quick after the war and still double or triple your investment.
But you just said that people who bought wheat have lost money,
right?
And it was expected. But why? Like, if Ukraine produces so much food and wheat and suddenly that production does not exist, wouldn't you expect it to go up? Because it's a question of demand and
right. So because the way hedge funds and people that actually understood more geopolitics, before the war, played the war, was buying wheat futures. Mm-hmm. Anticipating that the export of wheat from Ukraine will fall, which actually happened, but for very few weeks, and then actually Ukraine continued exporting wheat through this complex mechanism of ships and Russian get something in return, but actually export of wheat resumed after
the same production levels.
Almost. This is why wheat, basically buying wheat, which was the most common, most popular trend of playing the Ukraine war, was very painful for people who bought it after the war erupted.
Okay, I think one thing that is similar in this war and in the Ukraine-Russian war is that in both cases we're talking about people that control the energy sector, right? With Russia, they're one of the biggest producers of natural gas. And, in this war, obviously, Iran is heavily involved, and Iran is a significant player in the oil space.
Right.
And of course, there are a lot of theories that it is all related to the same battle of how to stream energy into Europe. But when the market recovered in the first day in the Ukraine war, how did the energy sector behave? Because what we're now seeing in the energy sector is that the energy stocks have actually went down in the last month, like 5 to 10%. I think ExxonMobil is actually 11 or 12%, which is the biggest player. That is quite strange, right? You would expect a war in this zone to take on prices to pass the $200 a barrel, but I don't see that.
Yeah, so I think that the investor understood that currently, because there is no oil in Gaza, there is no oil in Israel, there are barely oil in Egypt, and in Iran is currently only 1 million barrel per day, which is approximately 1% of their total production. They can do 4 or 5. They're under sanctions, so they smuggle 1 million barrel per day. US basically make themselves blind, for this 1 million barrel per day. But it's not, currently, even in Lebanon, there is no oil. So there is no immediate risk to the oil production.
Interesting. So from your perspective, it does not make sense for the average investor to even look inside this specific sector.
So here is something that most of the financial media, miss.
Are missing?
Yeah.
Okay.
So all of the news media are focused on Gaza, maybe Lebanon, which is surrounding Israel. But actually, the most important development for oil investors is the missile fired, like a ballistic missile, fired by the Houthis in Yemen. It's an Iranian missile fired by the Houthis toward the southern cities of Israel several times.
Yeah.
And UAV.
I think 3 days in a row, Yemen, which is a country we hardly knew existed, suddenly started sending missiles and advanced missiles.
Right. And Yemen is like 12,000 miles away from Israel. So many people neglect that and even laugh about it when the Yemen says, okay, we fired missile and fired UAV on you, and the IDF said, we are not aware of any hits. So they basically checked the spam, nothing arrived. Yeah. But we actually intercepted that. US and Israel actually intercepted that in the space. So
it was ballistic.
It was ballistic.
Yeah.
In the space or in the air. But the most important. So and they declared war. But basically, so if there will come retaliation, and assume there will be retaliation
from Israel to Yemen,
either Israel or US. That's why US. Again, it's like 12,000 miles out of from the shores of Israel.
Yeah.
And if comes retaliation, that becomes interesting to the oil market, because the Houthis are the one that actually attacked with missiles and drones and UAV one of the largest oil facility of Saudi Arabia a few years ago. And they managed to cause severe damage to that. At the time, Saudi Arabia was able to fix it relatively quickly. But if that happens again, and a major attack on oil sites in Saudi Arabia, that's a game changer for the oil markets.
So the risk from your point of view is dragging Saudi Arabia into this game, and then we're back to having chaos in the energy market.
Exactly. So if I were an oil investor, I would focus more on the Houthis
on the Yemen front rather than the Gaza
front. Exactly.
Okay. To me, it seems that, the immediate gainers from everything going on is social media, because they're exploding now, right? Like Meta, Twitter, probably Pinterest, which isn't really popular here. But I think, what we see that is now trending on our website. So we have this tool called Compare Stocks. And in this tool, you can compare different themes and sectors and all that. Where we suddenly see a breakout of users is in the aerospace and defense sector.
Right.
And I'm wondering what is going on that sector. So when I'm looking, for instance, on the stock comparison for defense and aerospace, and we're looking at the performance, we see that over the last month, even though the S&P went down by 2%, the leading companies, Lockheed Martin, Martin General Dynamics, Northrop, and others, they're up at roughly 10%.
Right.
So they've outperformed the S&P by 12%. Is there still an opportunity here?
Exactly. So going back to the first answer, in the hours, actually, like in the 1 hour after the war erupted on October, the first trading hour on Monday, October 9th, those stocks went up 6-7%. So for average retail investor, it was too late, and those are still hovering, on the level of the first hour of the war. And for us, I think there is an opportunity in Israeli company that actually serves the Israeli army. It's called Elbit Systems. It's one of the ticker is ESLT. It's one of the mid cap in the defense, and they are like $8 billion market cap. They are based in Israel. 20% of their revenues comes from the Israeli army or Israel Defense Force. And they specialize in UAVs and drones, which actually becomes very important part of the war, as well as ammunition, like precision ammunition. For instance, a guided mortar, or a missile that can, go directly to a certain window or to a certain tunnel.
Okay.
And this company currently experience a lot of demand. Just to put things into perspective, the annual budget for the Israeli defense is approximately $16-17 billion. According to estimation published in the press, Israel already doubled that for this year. So in 3 months, like in the coming 2 months, until the rest of the year, Israel is going to expend another $16 billion.
With on defense or specifically on Elbit?
No, on the defense budget.
Okay.
But again, if 20% of your revenue comes from Israel, and I'm not saying that the revenue will double because it takes time, but they're going to see significant amount of and bear in mind the whole concept. What happened here is not another round of fight between Israel and Hamas. This is a major change to the Israel defense.
It's a full-scale war.
Yeah, it's a full-scale war, but again, going to the investor perspective, that has a lot of implication on the Israeli defense budget going forward, unlike other rounds.
And not just Israeli, European, everybody that is afraid of a conflict now are arming up.
Right, that's derivative of the Ukraine war. But again, going back to ESLT, because Israel and the realization is that intelligence won't suffice to provide you enough warning. Mm-hmm. We saw that right now. For a war, you have to have far more power, ammunition, reserves and power, fighting machines on the borders every day. So that means that the next year's Israeli defense budget is going to increase significantly.
So I have a question for you. I'm looking here at TIpRanks, and I see that Lockheed Martin went up almost 12% since the beginning of the war. General Dynamics went up 10%. Northrop went up 7%. But Elbit went down almost 6% since the beginning of the war. That's based on what you're saying. Elbit should have went up significantly.
Exactly.
So why would it even go down?
That's a great point. That's a great question. So, what happens is Elbit is I think 5 to 6% of the main ETF and mutual funds investing in Israel, and many investors sold those ETF and mutual funds.
Yeah, it's important to say that Elbit is a dual company. It's listed both on New York Stock Exchange and on the Tel Aviv Stock Exchange.
Right. So this is the opportunity in our eyes, because the company that benefits the most of this war actually went down, while the general trade, let's go defense, went up. Well, actually, I think General Dynamics and Lockheed Martin are I'm not sure that will move the needle for them. For Elbit, for ESLT, that will move the needle for sure.
So, if I understand correctly, you're saying that there is no real opportunity in the aerospace and defense, at least not, in the traditional big companies, like in the blue chips of the world. But when you come specifically to Elbit, that is a gem that is missing, because first of all, it was punished for being an Israeli company.
Exactly.
And second of all, it's going to get many more new agreements with the Israeli government and others.
Right.
And I think, another interesting thing that I thought about, and full disclosure, I actually have Elbit. I've been holding it for years now. I think that on top of that, Elbit Systems are now being tested more than any other.
Exactly.
And in the defense space, it's very important, how experienced are these systems? Are they theoretically good, or are they actually been and proven in battle?
Absolutely. Those are, battle proofed or battle tested, all of those, new innovation. And further, they basically, many investors are afraid of the fact that maybe 15-20% of the workforce are actually drafted.
Yeah.
But people, I think no very few investors actually understand, that relates also to other user companies, that this is not paid by the company.
Yeah,
the
government covers the cost of these drafted.
Exactly. So the government pays the salary of those drafted.
It's
people.
interesting. And okay, so you know what? Let just to conclude for our viewers why this is a very important point. Elbit seems to be underpriced by about 20% to their peers for a few reasons.
Underperformed.
No, but underpriced. It's not just it's underperformed, but it also means it's underpriced for a few reasons. The first one, it's going to gain the most out of this battle.
Right.
The second one is that mutual funds and ETFs have basically punished it to reduce risk to Israel.
Right.
Now, there is another point that is interesting to talk about. Most of the employees are in Israel and they are paid with the Israeli shekel.
Exactly.
Their revenues come from the US dollar.
Right.
But their expenses go in Israeli shekel.
Exactly.
And there's a big spread now because dollar moved almost 20%
Right.
of the Israeli shekel.
Right.
So what we can expect to see in Q4 is that their earnings are going to go up because their expenses are going down. Their revenues are going up. And their expenses are going down, and this should be
You're basically right. We talked with the company because they hedge their expenses. It will take every month you will see one third of this effect into their P&L. So they will enjoy that, but it will be elongated across the next 12 months. So it's not like the expense is going down in 1 month by 10%. It's like,
it will take time, but you will see that.
It will diffuse into the P&L in the coming year.
Interesting. And so I guess we can also expect to see higher dividend payments next year from Elbit because of this.
We don't know. The company doesn't say that, but we again, everything is now, we're only 25 days into the war. It's very early, but I guess we can see far more, their next years are going to be much better than currently the analysts expect.
Interesting. So first of all, I see that, some of the big companies on TIpRanks, like Lockheed and General Dynamics, get a score of a 9 out of a 10.
Right.
And I see here a UK-based company called Laris. Laris? Am I pronouncing it right?
Yeah. L3 Harris.
And they're the only one in the defense sector that's actually getting a 10 out of a 10. And they're a $33 billion company. Is there anything you know about them that you can share with our audience?
Yeah, so they acquired one of the very unique assets in the defense. It's in rockets engine and rockets manufacturing. And we see the importance of, anti-missile interception currently.
Yeah.
But I'm not really, I've no intimate familiarity with this company.
Okay. So if I take what you said about Elbit and the fact that it is underpriced for being an Israeli company, it also means there are a lot of other opportunities we should probably look at. So in 2021, I think probably half of the tech ecosystem in Israel went public in the US.
Right.
And like all the other growth companies, they've been severely damaged from the market conditions. Most of them dropped like 70 to 80%. Right. Maybe now is a good opportunity to look at them again because, again, they're going to probably show profitability, and the market is looking now only for profitability. They don't care about the top line anymore since 2022. So maybe you want to talk about a few examples on that front?
Yeah, exactly. So I think everything that Israel related got hammered in the last few weeks. Mm-hmm. You see Monday versus their peers. You see Camtech versus the peers. You see Tabula versus the peers. So everything Israel related got hammered 15 to 20% in the last year. But again, I think people are missing the full picture. Those companies are global based. Most of them are software, so there is no any impact of supply chain or something like that. Even those are based in Israel, there is no disruption to, as far as I know, to almost any of these tech companies because their facilities are usually more in the center of Israel. There might be, but currently there is no. There is none. And the fact that again they are usually sales in dollar or euro, and their expenses are shekel based. So again,
except for marketing expenses and sales, like the focus is R&D,
right? But also marketing. You have Facebook and Google budget, which are significant. Those are in dollars.
Yeah.
So and I think and people are basically afraid that again their workforce is being drafted, but assuming there will be none of them were operating in the most efficient way. The fact that there are 15% or 12% people currently drafted. Means that they're going to have 15 to 12% less expenses in the coming quarter. And then when the coming quarter will be published in January or February, you will see a major operating profit bump
Okay, so if we're focusing on opportunities and tech companies that are headquartered in Israel but listed in the US, there are three companies that pop up as companies that have very high smart score. The first one is Mobileye, that gets a 10 out of a 10. The second one is Wix, that gets a 10 out of a 10. We also have Comtech, that gets a 9 out of a 10. And then we have Monday, which is very popular
Right.
with investors. It shows a lot of resistance during markets drop, and it gets an 8 out of a 10.
Right.
Where would you want to start?
Yeah, so Monday is one of the great success story that we're actually able to grab huge market share in the workforce management, competing with Asana and Smartsheet and Microsoft Project and of course Excel and stuff. So and they are growing very fast and moreover they enjoy really sound free cash flow, approximately 20%.
They have an amazing net dollar retention rate, right? They're able to grow existing agreements like no other company in Israel.
Right.
Okay.
So, and their metrics are really good. They generate cash, unlike many of the other peers. And again, the market punished them for being Israeli based. I think more than 90% of their revenues are coming outside of Israel.
Yeah, no, but I think it's important to reiterate what does it mean that the market punishes them? The majority of the capital that is then circulated in the market is in mutual funds and ETFs.
Right.
Whenever something happens that changes the risk model, they simply throw it away and focus on other things that seem more secure. And that is basically the reason why we see these companies dropping,
Exactly.
even though they're all going to surprise us in Q4. Most of the Israeli companies that we're now talking, I see, are also going to report in the next week and a half.
Right.
So I expect even in these reports to see not the impact of the war, but impact.
You will see it in the guidance.
Yeah.
So again, the war wrapped on October 7th. It's
going to be reflected in Q4 and
Exactly.
maybe Q1 next year.
Exactly.
Yeah.
Exactly.
So Monday is an interesting company that I've never invested in, but I always thought they're doing an amazing work. I know that the people in our company, product managers, use them and are very happy about the product. The second company is Mobileye, which was acquired, I think, like 10 years ago by Intel, and then it was IPO'd about a year ago. It is still trading more or less at the same levels of the IPO, which is actually kind of good because the market dropped. Analysts expect it to say that it has a 42% upside in the price target, so analysts believe it's underpriced. The CEO of Intel decided to go ahead and proactively invest in Mobileye with his own money, not from Intel.
Right.
So maybe Intel is a good opportunity right now?
Mobileye.
Mobileye, sorry.
Yeah, but I think here there will be a minimal impact of the war. Bear in mind, the major impact is now what we call the EV recession.
Okay.
So now we have seen Tesla reduce price. We have seen Ford back their plans on terms of EV sales. We have seen what happened with the Chinese EV car manufacturers. The EV industry is encountering a glass ceiling currently because of prices.
So Mobileye is more impacted by the EV industry than it is being an Israeli tech company.
Exactly.
Okay.
Exactly.
So you don't want exposure to that unless you understand the EV industry good enough.
Right. I think we are now going into a kind of major, I would say, bump or major, belly in the EV penetration for the coming year or two.
Okay. And what about Wix? Wix has always been a NASDAQ darling, right? It went up. I remember when COVID hit, it dropped like from $300 a share to about 80.
From 140 to 80, yes.
No, it got to almost 300 like in 2020.
Right, after the COVID, 350, and now it then went all the way back to 65.
And I remember when it reached 80, Avishai, their CEO, started buying a lot of shares, and then it took off again, back off. Maybe this is the strategy that people should be looking for, insider activity, or now it's trading again for around the $80.
Right. So
$78. Is there a big opportunity now in Wix?
So I think Wix was focusing too much on growth and less on profitability.
Mm-hmm.
Also, the management bonus was all about growth, no profitability. And that changed a year and a half ago when Starboard, the activist, the private equity Starboard, took a position and basically reshuffled the whole strategy of the company.
Yeah.
So since the last 18 months, the company focused more and more on profitability. They outlined a roadmap to, I think, 20% or 15% FCF margins by 2025, and they are now marching toward that.
And last quarter, I believe they already reported their first earnings, right? Positive earnings.
Right. They again, GAAP or non-GAAP, but the cash flow is now moving in the right direction. And here, I think there will be almost no impact to the war because again, they are global. Average Joe that has his website on Wix on Flour Company, whatever, doesn't care. And so we will see here again the profitability improves through the factor we mentioned before, the US dollar, the ILS weakening, and the fact that their salary cost will go down because of this complex mechanism. We're not going into that the Israeli government actually pays for their employees.
Okay. So if I had to summarize what we've discussed until this point, your recommendation is to kind of stay away of the energy sector unless you see something evolve with the Yemen front, because then there's going to be a lot of volatility and probably a lot of opportunities for the retail investors, right?
We say that the impact, again, there are many factors impacting the oil energy, but we are saying that this war will not affect the oil energy unless the Houthis and the Yemen join.
Yeah,
right.
Okay. On the defense stocks, the biggest opportunity that we see right now is Elbit that has been punished, even though it should be overpriced and not underpriced.
Even though it's the perfect beneficiary, is the most beneficiary of out of all the tech, the defense stock that was punished instead of getting rewarded.
Okay, and last but not least, I mentioned it a bit at the beginning that I know that you're a big AI expert.
Right.
Are there companies that will benefit in the AI space? Like the first name that comes to mind is Palantir, obviously, that has this AI system, but I don't know how much it is related to the ChatGPT and, the generative AI that everybody's talking about.
That's what a different podcast, because what this war proved is that technology failed. Israel relied on technology on the borders, relied on AI.
Relied on cyber,
basically. And what happened is that the Hamas, that have almost no technology, they used like notes and they used classic physical form,
brute force,
and basically they were managed to go all the way the war were in the Middle Ages and surprise Israel, and using very very basic drones to shut down many of the most advanced technology sensors of Israel. So no AI could predict that.
Yeah.
That's for. They think that's a great lesson for the armies and strategy, because that's.
So you think companies like Palantir that are very smart systems based on AI with millions of signals flowing in. I don't know if the Israeli army use them, but you think these companies disappointed enough so that the average investor can remove them from their portfolio, understanding that it's not really a game changer?
Again, I think those companies are really good in fighting terror activity. I don't think those are companies they're or finding anomalies or money laundering and stuff. I think there was a promise that this company promised, or there was kind of very sexy for many also defense officer to go, okay, I will predict the next war. That failed miserably in October 7th. And that the concept of AI, anticipating that failed significantly and miserably. And I think it emphasized the need to rely more on the classic, arms, boots on the ground, human intelligence, not necessarily cyber intelligence. That was very painful lesson from this war.
Interesting. Well, we always learn lessons from these unfortunate events. I really want to thank you for joining us today and sharing your wisdom with us.
Thank you for having us.
I think that we learned a lot about opportunities, and I'm going to make sure that we will highlight them in the video. I also want to thank our audience who stayed to listen. If you enjoyed this podcast and want to hear more about opportunities in this status, please click on the like. If you did not like it, please click on the unlike, so we can improve and make sure that we provide you with the most interesting content that we can. Thank you.
Thank you very much.
TIpRanks presents TipTalks, the only podcast where you can listen to the insights, discover the trends, and power up your investment portfolio.